going on, audience? We are coming at you in a new scenery. This is the official Crestview Magnuson workroom. And I know you guys can't see what I'm looking at, but I'm sitting here in a beachfront cabana looking at these mountains and just extremely beautiful terrain. Courtesy of Kyle Porosnik picking out this one for me, so I got something good to look at. But what I think we're going to do today is go over a couple charts on what we are looking at in the market and how we go about trading these treacherous times, what we're looking for when entering positions and exiting, and how to identify high probability setups in the market. So without further ado, I'd like to get started with a look at the E-mini S&P futures chart. And we're going to take a look at the weekly chart on the far left here. So let me just go over here. Still see me, right? So when I'm looking at this chart, the first thing that I want to do is identify the trading range. So what I mean by that is if I grab my red marker, this is going to be a little bit rough. This is my first time using it. I'm going to identify the all-time high that we're in right now, or that we've had. All right, so here we're going to break down my thoughts on the E-mini S&P 500 futures. This is what I use when I'm charting to identify anything relating to the S&P 500 or SPX. Obviously, if you guys are tuning in here, you probably know what futures are. They're derivatives of the underlying asset in the S&P 500. So I've done a lot of different types of trading, supply and demand, support and resistance, and I've kind of developed a system where I kind of combine bits and pieces of everything. So you start off with the top-down analysis. So if I take a horizontal line, it looks like we're trading within the yearly range of 2021. So I'll mark out the high. It's going to be there. Okay, hold on. I'm going to actually delete. Let's try this again. I'm going to mark out the range high up here, 2021. Oh, come on. 2021 high. Let's make this a little bit thicker. Give it a little red color. And this is going to be, 20, 2021 high. There we go. And now, so that is what's capping this market to the upside. Anything above that we haven't really seen. So now let's identify what's capping the market to the downside, and it's going to be this 2021 low, 36.50 around there. So we're going to just label that as 2021 low. So from a higher time frame perspective, these are the key areas of our macro range. As you can see, in 2022, we did actually go below, but you see that it's a wick. We weren't able to close below, so that is going to prove a necessary area in the downside. So once I identify that, I would like to go back down into the quarterly chart just to see if we have any more areas of confirmation. Now on this chart, it does look like we did have a deviation below the 2021 low, but it was short-lived as the past quarter we saw an 8% up move from those lows. So it looks like this 2020 low is still a respected area. Nothing really much to look at here. So let's drop it down to the monthly. And yeah, still trading within this range. We had a test of supply on the monthly. So let me turn off or this is actually demand, this is not supply. We had a supply zone retest, barely. You can, I guess, this consolidation right here, you can call that supply zone. So if I drag this out, we got a nice test with September and October. So this is going to be an area where there's a lot of either buyers who didn't get orders filled or sellers who are trapped, as you have this large momentum push up after COVID. You got a couple red months here where sellers are getting trapped and the price wasn't really moving. And then this big green candle that broke this market structure right here, followed by another one. So this is what gives me an inclination that price will retest this zone and see if we can get a reaction. We got one here. So yeah, now we drop down to the weekly. Again, this is top-down analysis. So when I look at charts, I like to look at it from a higher time frame down to the lower time frame. Just because you can get distracted by these lower time frame moves. We might get a couple days going up, but the overall trend is down, which is why, when you look at the yearly or the quarterly chart, you can see all those red candles, but then you can see like these big swings that are happening up, although they're relatively short-lived compared to the overall move itself. So yeah, another on the weekly, we can start to identify some SR ranges. One thing that I like to do when I get down to the weekly is grab a Fibonacci line to figure out my 50% area in this range, because that tends to be an area that's respected on the charts. So what is this? 4230? 4230. Okay, so I'm gonna go and edit this, get the coordinates. 4230. Roughly. And then let's make that, let's just give that a dashed line, and maybe, yeah, we'll just leave it like that. So now I can get rid of this. Lovely how that's such a nice, like, even number. Okay, so looking at the chart now, this mid-range seems to actually be pretty important, as April through July of 2020 or June of 2021, we got some resistance here, broke through, retest, almost retest before hitting the top of our range. Comes back down, price does, and we got some nice rejection off the mid-range before we then broke the structure, and then underside retest here in June, back to the range lows where the 2021 low where we tested that and got the second massive bear market rally. I think this was about a 20% move. And I remember a lot of people yelling for a new bull market when we saw that. When we at Crestview and Magnuson, we were aggressively shorting from about the 4,200 area. So yeah, then we got the deviation. I think there was some FOMC or some Fed news that came out. Market just bumped up, and then got a deviation of the mid range before rejecting. And it does look like we've created a pretty nice supply zone here on the weekly time frame. So if I just mark this out, we are actually trading in this supply zone right now. This is the last up candle before the big downward move that broke structure. So some of these wicks would be considered structure, and even if you wanted to go about the first retest of the 2021 low, that is also a structure break. And then we got the deviation. Now we're trading back within the range, and even better, within the supply range. So that's going to be key. This is how I incorporate my trading strategy, all the different things that I've learned into one strategy. So basically, that is how I go about the top-down analysis. And so this is still the weekly. Let's drop down to the daily. Let's go to the daily. Let's see what we're looking with on the daily. Okay, so when I'm looking at the daily, you can get even better ideas of market structure and the current trend. As you can tell here, let me just give you guys a measurement. we had a bear market. We started a bear market rally. Let's call it that Friday, October 22nd. It's been, what is that, 9 days, 9 trading days, almost 10% gain. I'd consider that a bear market rally. You know, as we saw over here in June, we had a very large bear market rally. Like I said, almost 20%. So that definitely killed a lot of late shorters, and longers who were buying this rip eventually got smacked back down to the tune of a almost 20% down move. So giveth and taketh, right? Okay. So on the daily, we've got a couple other areas to note. We've got a key SR area about, what is this? Yeah, right. Currently we're at an SR zone. So I'm going to make this a little smaller, give it a line, and then here we go with the blue. So this is going to be the immediate cap of our range. And every time that price has seen these areas, these levels, we've either gotten a rejection or a massive break. And then the trend flips. So back in May, we created this low, and then we got some wicks below, deviation up, rally, kill some of these highs, and then we finally got the breakdown. Test, deviation, rejection, another test, rejection, another test, created demand and broke through, which was eventually retested actually in September when we got some of the inflation news, and I think we beat by a little bit, and then price jumped up. So that's kind of one of the ways that you could trade this. You see a massive move that breaks structure, i.e. these highs here. Last down candle before the up move. We got a retest. You could have entered on a long. You'd have to probably take a look at the lower time frame as well. But that is a higher time frame swing trade that I would have taken in this area right here. For the buy, however, was not bullish, so I was deleveraging and de-risking in long setups and waiting for the bigger move down, which is kind of where I'm at right now. Deleveraged at around the 36s, 3650s, and we're waiting to see some sort of signs of another bull trap, i.e. trend continuation to the downside. So let's take a look at the 1 hour. So now I like to go down to either the 4 hour or the 1 hour after taking a look for some areas on the daily for importance. And yeah, we're still above the 2021 low. And what I like as far as looking at lower time frames is you can identify ranges in the lower time frame as well as the upper, as well as the higher time frames. So now that we're on the 1 hour, you seem like we've kind of established a range here. This is going to be this SR area, this blue line is our range high. And I would consider this area right here to be our range low. So this blue line and this blue line is the current range, right? How do we go about figuring this out? So we got the high put in right here, rejection, SR flip, got back above, hold, one final test, big move up, created a range high, tested, rejected, back down to the range lows, wick deviation, back above, deviation, big move up, and now we're back inside the range again. So something that I'd like to see out of ES, if I were to even take a long, would have to be something. Let me grab my brush. Let's see if I can find that brush, right? So I'd look to see for a long would be a move up to break. Ooh, okay, hold on. Move up, flip this SR, come back down, hold it, and then, chop around, create some new structure within here. So now you got this new high. And then I'd like to see the market break it, retest it, and then continue higher. So that would be my long entry on ES is, we got a new high above SR, hold above, break that high, retest. That's my entry for the long. And then in terms of profit targets, I would probably be inclined to take some risk off of my position on a clean break of, I'd go with these highs right here. A lot of stops up there, 39.70. We've got an inefficient move right here from September, a huge drop. So fill in some of this gap, maybe call it this SR zone right here, 4,080. And then if we get extremely lucky, we could get it clear of these highs here, 41.75. So I think that these are respectable targets if you are amongst the crowd that believes that this is a bear market rally, just like myself and our team at CNM. 39.80, that area is going to be our target one. That was not that good. 40.80 is going to be our target two, and then 41.75 is going to be our third target, and that's where we will be. If we get lucky and get a squeeze up here, that's when everything will be closed, and then I will be extremely bearish from that point on. I'm just breaking structure. Once we get a clear of those highs, rejection back under, retest, break below the low, that will be the short play. And in all reality, we'll probably create new lows, and we will most likely fill in some of this demand here between, 3,250 and 3,600. We'll probably clean out some of these lows, and we got a stop hunt right here before a big move up. So yeah, that's my thoughts on ES. So overall bearish, short term, bullish. There's a lot of different ways you can go about it. You can flip long and short, or you can hold all cash, wait for the potential bottom or high probability setups for longs, or you can de-risk and de-leverage and play the overall trend, which is down in the longish term, and take these high probability short setups. The higher we go, I'd like to say the higher the probability of a high risk to reward setup. High reward to risk setup, so risking less the higher we go and making more on the way down. So that's personally what I like to do, especially with ES, considering we've got very little liquidity in the markets now, and these big moves happen all the time. So if you're imagine being short, September 30th, and then you get this massive rip up, 7%. That's, if you're leveraged at all, you're getting a 20% drawdown, which is horrible. So that's something you just got to keep in mind. Even if you're right about the long-term trend, these bear market rallies they're a bitch, man. You got to be aware that they're going to happen. So you can take caution and deleverage and hold more cash, or you can use a small percentage of your account and take some risks, play some of these range plays, these longs. Another thing I didn't even see here is the mid-range 2021. So that could be another confluent indicator for a particular position. We get a rejection or a deviation above, break back down, break the low. That's a good short-term short trade entry as well. All right. Wanted to cover ES because that guides all markets, whether you're into equities, futures, or even crypto. I was going to go over some Bitcoin charts here. So let's take a look at Bitcoin as the S&P and the NASDAQ really do determine the moves on Bitcoin. So let's just get rid of. Oh no, let's just use what I've already got here. So I'm on the daily. Again, higher time frame perspective. I've already got this chart marked up, and these zones have served me pretty well. So let's go to the weekly even. I'll just hide some of this stuff. So the key areas for me, what's capping this market to the downside? That is that 2017 or December 2017 all-time high at like 19,700. So, I got the chart up here, that big red line. This is kind of the area with the most inefficient price action, which is why I've got that marked out. There's just, let me zoom in a little bit. There's just only green candles for weeklies basically, except for right here, which is coincidentally the area we're at now. There's a little bit of consolidation here, but other than that, it was just all green all the way up. That is something that you definitely look for in crypto. You see it a lot more than in equities. Very inefficient price action. Not a lot of trading was done in this area, seeing that all of the candles were green. So, that basically means there's no sellers, only buyers. And there's got to be some sort of equilibrium, which is kind of what we're seeing now. A lot of selling and buying going on in this range. And we came up all the way to 69,000, and now we're back down trading at 2017 peak levels. So that's not a great sign. I was extremely bearish once we broke this area here, 32,000. I've been bearish since then. I haven't really bought any spot since. Make a couple swing trades over the weekend. I bought some spot altcoins at around 18,000, just because the reward potential is a lot higher. There's a law of diminishing marginal returns with Bitcoin. It's been around the longest and it's got the most value. So I tend to, when we see some capitulation event in Bitcoin, that's when I tend to be more inclined to trade altcoins, because just, if a 10% move in Bitcoin really ends up being like a 30 to 40 or even more percent move in some of these altcoins, as Bitcoin shows weakness versus them. And you can look at the Bitcoin, you can look at alt BTC pairs to see the strength as well. So dropping back down to the daily, the chart is actually pretty pathetic. From, I guess, June 18th through now, really, we haven't done anything, right? We have a swing low. You can call this a swing low here, this area. Or you can consider that the bottom at 17.6 that was made in June. And the upside cap in the market is this 24,200 level. And you can see it's been extremely respected. Top end of the range, wicked rejection into demand, bought back up, clear some of these highs, deviation back below, and then we got the huge sell-off, and then we saw 18,700. We saw 18.5, 18.2. We still haven't cleaned out the low made on June, what is that, the 18th? But at the current moment, we're kind of just in a range-bound environment, right? We've got some SR zones here, like I mentioned. It's been respected to the downside. Every wick down's been bought up, and we've currently experienced somewhat of a bear market rally, although not incredible. This is still what, a 12% move, 12.5% move, which is always good. So basically, what I'm looking at on Bitcoin is just a range bound play. So every time we've seen this area, we've sold off, and every time we've seen the bottom of this range, we have been bought up and taken to the range highs. One thing that I do want to keep in mind is, yes, we've had stop runs, but if equities continue to rise and keep going up, and we keep getting green days and weeks, I would like to see Bitcoin come and clear some of these highs, maybe even up to 22.5, as that's another key area of um, SR, support and resistance. Whether we get a deviation or just a rejection. I will still be looking for shorts, as that is the overall trend of the market. Interest rates are still going up, expected to go up until March of 2023. Inflation's still high. Not sure whether or not we've had peak inflation, but we haven't seen. We have no way to tell whether that's the high. It could get worse. Growth still has to go down. Growth is still relatively up there, but we know it is on the decline. You can take a look at the Chicago PMI. When that gets below 50, that's a good indication that we're approaching a deflationary environment. So yeah, as far as crypto, I haven't really been extremely active. I'm more active in crypto within these smaller ranges, right? I like to look at the 1 hour and the 30-minute and the 15, because you got ranges within ranges, right? Like, this is one range now. This is the top. This is the swing low, swing high. Looks like we're at the mid range right now, so we'll have to see the reaction. Let's just actually point this out. If I'm just eyeballing it, something like this. Yeah, so rejection, sell off. Oh no, it's probably a little bit higher. Probably right about there. Okay. Swing into this range, create, this is the low, this is the range low, this is what's capping us to the downside. Up, tested SR, got a rejection, sell off, reject the midpoint, break down, retest the range lows, consolidation at the mid range before breaking up. Now we've kind of got this double top here. Sell off to the mid range, rejection, clear some stops before taking out those stops, and then taking out the stops of the longs. There's a lot of, I won't call it manipulation, but there are a lot of large market participants in the crypto market, especially now. There's not that much liquidity. Like I said, liquidity is the thinnest it's been in, I want to say, since 2018, maybe even before that. So there's going to be relatively large moves within this, because it doesn't require as much capital to move the market anymore. But it looks like we have reclaimed this mid-range here. I'd like to see a little bit more price action above the mid-range, creating maybe a little higher high, something like this. If I grab the brush, clear out some of these stops, retest the mid-range, create some structure. You got this high here. Sorry, that's not a straight line, but it is what it is. Break the high, retest, boom, clear some of these stops on the way up. So this retest of new structure would be my entry, and I would take the long, probably either take out these shorts or to take out some of these shorts here. So yeah, that is my current thoughts on Bitcoin. Long term, I do believe that we will be taking out the lows of June. And I've got some areas marked out actually as to where I think that we could be going in the long run. I don't know. I like this 13,000 area. It's kind of, there is a candle body close on the monthly in 2017, and this is kind of the candle body close, and it was also the point of rejection at the start of what people thought was a bull market in 2019, before we got the sell-off, and then COVID happened, which brought us near range lows. So I kind of like this area. Again, a lot of inefficient price action here. We're stuck within this, I guess you can call it 17.7 to 20K range. Just, there was some trading going on there, as it was a previous all-time high before this breakout. So we're stuck here. But I think that, given the macroeconomic environment, we are going to see this broken, and that opens the floodgates to either us falling around this 13.7, 13.5 area, or even filling in inefficiency lower down here. A lot of IPA, inefficient price action down here, and you've got some demand down here. You can either call it this, or you can call it this last down candle right here before a big upswing. So between 10 and 12K, that would be, if we got all the way down there within the next 3 to 6 to 9 months, I think that would be one of the best buying opportunities of our lifetimes. Because obviously, if we're going to go down in Bitcoin, we're going to see equities fall, and that's going to, give us some great opportunities to set ourselves up financially, as long as you are smart with your money on the way down, deleveraging, holding less risk, and just being patient. A lot of people have trouble being patient. So unless we get a clean break below 17.6, I will most likely not be taking a swing position at all, just trading within a range. And then, if we get a break below 13.7, 14K and hold, 12K, 10 to 12K is going to be imminent, where I will be placing my spot orders and holding for a while for the next halving cycle, which should start in, I think it's March or May of 2024. So, if we get some consolidation here for a couple months after we get here, and it's almost the end of 2023, it looks like that's probably going to be the highest probability setup of our lifetime. So those are my thoughts on Bitcoin. If you guys have any questions, feel free to reach out to us on social media. We've got LinkedIn. I think we got some other ones. We'll throw those out there. So feel free to reach out. We've got an email that'll be somewhere too. But yeah, I hope you guys enjoyed the new setup. It's been really fun working in the Metaverse, in my bodega on the beach of Mykonos, educating you guys, giving you guys some alpha on some of these markets. So I think this is something that we're going to try to do more often, as I actually like it a lot, and I got a feeling you guys are going to like this a lot, find a lot of good information. Hopefully I can help you guys learn, you guys can help me learn, and we can make this mutual. No one's really doing this right now, and publicizing it at least. So at Crestview and Magnuson, we'd like to be, the pioneer for this Metaverse trading webinar style events. So if that's something you guys are interested in, we'll keep doing it. I think I'm going to keep doing it anyway, because I think this is fun. But let's blow this up, get some more traction, and yeah, see where it goes. I appreciate you guys all for tuning in. See you next time.